Hey, Paul, good afternoon. Thanks for joining us on another set of the PropTech Insight series this afternoon. It's great to have you on board.
Thanks, Neil. Great to join you and really excited to have the chance to chat to you.
Paul, let's start off with where are you joining us from today? It seems like you're also at home, as I have been for the last 9 months. Where are you based out of, and how have you been faring over the last 9 months?
Yep, so I'm based out of Luxembourg. So I relocated with my family to Luxembourg last year. So it's been a really good place to be in the past 9 months. It's got its own challenges as the rest of the world has, but working from home, we've been largely working from home for the last 9 months. For me, that's actually been quite a good experience. We've recently had a new baby, so it means I can be at home. She was born on the 2nd of November. So it's been a really good experience for us to actually spend some quality time at home, as well as keeping up to speed with clients and people at work.
Great. So tell us a little bit about Aztec. Aztec's been an organization that's really grown over the past few years. But if you could put that into your own words and provide us a little bit more about your role at Aztec and how you've grown.
Yeah, so Aztec is a specialist fund and corporate services administrator, and we really specialise only in, we're quite a niche provider compared to some of the other larger, more diverse providers. We really focus on fund services for the alternatives industry, so private equity, real estate, infrastructure, private debt. So we have probably grown slightly slower over the past 20 years since we were formed, given the focused nature of our business, but that's accelerated in the past 10 years. So we're now over 1,000 people across Europe. We have around 400 billion of commitments under management, so investor commitments. That roughly translates to about $1 trillion of underlying assets for investors. And then we work with a range of institutions, so some of the big institutional multi-asset managers right through to the private equity managers on the VC, secondaries, buyout funds, and then a lot of actual investors as well, particularly on the real estate side of things. We have quite a large number of investors invest in pension or insurance balance sheet directly. I lead our real assets business across the group, so I have responsibility for all services we do across the group for real estate and infrastructure funds. And as part of that, I represent the real assets product and our Luxembourg office on our executive board.
Have you seen the needs of your client base changing over the past 12 months in terms of how they may have had to react to COVID, in terms of managing their investments and their reporting, or their overall investment strategies and differences in capital movements?
Yeah, so we've definitely seen initially a focus from clients in March, April, May, and still right through to today around asset protection, making sure that they had the right liquidity within the structures, making sure that they were commencing negotiations with banks where appropriate. So really looking at how we really protect the value within the underlying assets for investors, and a number of different challenges within obviously tenants and in different sectors. Some sectors doing really well, in industrial, build to rent, really doing really well and proving really robust, but there's obviously challenges within retail and certain office space as well. I think we've been a really great partner for clients in the past 9 months. I think we've been provided clients with stability and a real kind of foundation for giving them comfort around their actual back office services to allow them to focus more on the middle and front office. We've done a lot of client relationship reviews in the past few months, and the consistent theme we're getting from clients is they haven't really noticed that we've been out of the office, which is we're really proud of. It sounds quite boring to say that, but it's kind of something we're really proud of because it's a real vindication of the services we've been able to continue to provide in these challenging times.
Did you find that it was a challenge for Aztec to migrate to or shift to a work from home situation? And how much of the organization would be working from home still versus working from the office?
Yeah, I mean, the first month in particular was a real challenge for people. I mean, culturally for us, it was a big shift. We were and still want to be a really social office-based organisation. But the past 9 months have really taught us around actually just giving us much more confidence around the ability to work flexibly and work remotely. And that's something we'll really keep with us, albeit we are really looking forward to be able to have slightly more social and personal interaction than we've had before. It was a really fast-paced shift for us. We are already doing a lot of IT change and enhancements for our business. We quite quickly deployed things that we were already planning to deploy in 2020, get into 2021. It almost really accelerated a lot of the plans that we have around deployment and usage of Microsoft Teams, for example. We became big users of that and really accelerated some of the change that we had within the business. So there's, as much as it's been a challenging 9 months, there's a lot of positives that have actually come out of it from ourselves. Jurisdictionally, it's actually really interesting if you look at the different jurisdictions, because there's a different story in each. And if you look at it from kind of going through the spectrum, we've got our Guernsey office, which has pretty much been in a bubble for 9 months and got full capacity, and the guys lead a normal life there. They kind of moan a little bit that they can't leave the island really, but they can go to the pub, they can go to the restaurant, they can do what they want on the island. Jersey's a little bit in the middle. We've had a good spell in Jersey, but actually there's been fewer restrictions than in the mainland, but there's been some uptick in some of the concerns there from the government and more into a lockdown now in Jersey. And then the UK and Luxembourg are other big offices, and the Netherlands as well has been really kind of going up and down. We've been in a position where we've had 10 or 15% of people in the office. We managed to go up to about 30% in some of the offices over the summer, but as things have got slightly worse again over winter, we're back down to that 10-15%. But yes, and we try and prioritise the guys coming in that have got slightly more difficult home scenarios or people that need to be in the office for certain reasons. But by and large, we've been able to provide real stability to our people, which you can't underestimate. The ability for us to continue to promote, pay bonuses, service clients, give stability to our people and clients is hopefully engendered a lot of goodwill within the clients and people as well.
Yeah, no, it's interesting. Maybe Amsterdam's just gone on a lockdown, so pubs and restaurants are closed here for the next 4 weeks. Maybe we should all head to Jersey if they'd let us in. But I know we've talked technology in the past, and investment in technology has been a big part of Aztec's ability to grow and scale as a business and provide differentiated services and transparency to your growing business. Can you walk us through some of the thoughts and the decisions that you've made on that front?
Yeah. And we are, I would describe ourselves as part people and part technology business. And that has changed over the past 20 years to be more technology focused as well. And I think that trend will continue. I think we will always want a key part of our business to be that people element. We are a very much relationship focused organization. And that's something that clients really give us consistent feedback that we perform well on. But there is an inevitable need for our alternative industry to automate and to enhance the technology that we use, and we think that's something that the industry's been grappling with for the past 5 or 10 years, and we think it's something that the industry will continue to grapple with. And it's challenging given just the illiquid, unstructured nature of our industry. It's not like a UCITS fund or a bank or an insurance company where there's much more structure in the data and the process, but there is going to be an element of the industry that we will automate, and we need to really be at the vanguard and the forefront of doing that, because if we don't do it, our competitors will, our clients will, so we need to really be at the forefront of doing that. And we have and been quite fortunate. We've grown completely organically as a business, so we've not had any M&A activity which leaves us with integration or legacy systems. We've made a decision early on to have core operating systems that are best in class. So we use one system for our fund services business for private equity and transfer agency for the funds that we have. And then we selected Yardi around 4 years ago to deploy Yardi to be the best in class solution for our real estate clients. And that's been a really successful journey for us. And I say 4 years ago we started that journey. We started implementation 2017 or 18. So we've now been using it for a couple of years. And in reality, we didn't want to tell people about that too early till we got mature in using Yardi and actually sophisticated in using it. We didn't want to go to market or tell people about that too early, because we wanted to learn to walk before we could run. But we're now in a fairly mature place with the usage of the Yardi system. And then with that as well, we recognise that sometimes within certain elements of the technology we have, sometimes there's limitations, and sometimes it's best for us to actually use ancillary systems that we can actually bolt onto Yardi or the other systems that we use to actually bring best in class for things that Yardi may not be able to do. Our experience so far with Yardi has been able to do almost everything we wanted to within the work that we do, which has been really excellent. And then the ability to integrate with other systems as well has been really good. And then, so we're quite a simple organisation. We've got quite a simple technology platform, but we think we're well placed now where we've got best in class systems for each of the elements of the services that we provide to clients.
Yeah, I want to say from a partnership, it's been great working that model by which, one helps design fully connected systems and Yardi is part of that, but again, it's connecting into other systems that you use for other parts of the business that suit you better. I think that's been a strong part of the partnership. It seems like the last 4 years have just flown by. Amazing that it's gone so quickly. What do you foresee as the major changes if you had to look through the crystal ball for 2021 and 2022?
So for us, we're doing a lot of work around our IT infrastructure, going through a cloud first strategy, moving a lot of things to the Azure platform, starting to unlock a lot of the tools that we have with Microsoft. We think that there'll be massive opportunity for us to, where we've got core systems that we have, how do we, and again, the systems have reasonable amounts of functionality to do reporting within it, but how do we get data from those systems, data from client systems, data from other potentially third-party administrators or property managers? How do we get really rich data from all of those organizations and collate it together and be able to really do quite powerful things with that data for our clients? So that's something we're really excited about for 2021. And I think many of our clients will be really excited about. I think that's a challenge that many have been grappling with, and many of the big institutions are working on, but it's almost many of them are too big to almost crack that nut, and some of our other clients are almost too small to even think about starting that process for the private equity managers or for the institutional investors themselves. So we think we sit well placed to come with a data service and some technology that clients will be able to buy rather than build, that will be really exciting for us to evolve into. And then there's other things if you ask our Chief Executive Officer and founding member Edward, he'll say we always need to be looking in the rear view mirror as well. We're very excited and looking forward, but we always need to be looking after our existing people, our existing clients. And he'll use the phrase stick to your knitting, like we know what we're good at and we need to do that, continue to do that well, but there are other areas that we're excited about evolving into and being able to do more value add services for clients as we start to automate some of the other things that are potentially more mundane or less interesting.
Yeah, we've certainly seen over the past 12 months on our side that those organizations that have heavily invested into IT infrastructure and digitization have fared better due to the COVID crisis, because again, their ability to access information, report back to investors and stakeholders, and look at repositioning their portfolios, it's just so much easier to do. What we've also found is that it's not only the organization, it's the downstream partners where sometimes the disconnect is. So it's looking at the entire kind of information and value chain of the client and their services to ensure that all aspects are connected. And certainly seems that Aztec has positioned itself really well to be a partner to large client bases of yours.
Yep, it's been, I think we're very well positioned for that. And our basic premise with a client, we were born originally, I suppose, as an offshore service provider. We were based in Jersey, but we're really an outsourced service provider. And if a client wants to outsource something, we need to be at least as sophisticated as the client, or even more so, and cost effective for clients as well. So we feel we're really well positioned to do that with our clients. And that also gives clients the ability to scale up or down, so they can actually quite quickly grow the services we have with them. They can verge into different areas of private debt if they're starting to diverge into different asset classes themselves, and that's really the power of having a strategic outsource partner, is you can really move quickly to have that partnership in place.
Yeah, that's great. Hey, one additional question for you: favorite restaurant in Luxembourg?
Oh, McDonald's probably. No.
Easier with kids and a drive-through.
Yeah, no, so the one we go, yeah, certainly in these times, yeah. There's a really nice, if anyone's ever at as you come out of the airport, there's a really nice restaurant called the Airfield. It's really good. They're really nice people that run it. We actually we've got a kind of permanent room there that we use for people coming to visit and things, and so spent quite a bit of time there. But yeah, they're really good people. So the Airfield in Luxembourg, I would pick, and say it's close to the airport if you're out that way.
Fantastic. It's one of the amazing things this year, like for many of us, is that I used to travel multiple times a month on airplanes, and So I don't miss my 6:30 commutes either down to Luxembourg or up to London City, and the little KLM cheese sandwich that would normally get. But it's been nice not being on an airplane for so long, but at the same time I miss it. So, but hey, it's been a real pleasure talking to you today. Thanks for joining us, and we really value the partnership that we've built with you and the Aztec team.
Yeah, likewise, and we'd just like to extend thanks to the people we work with at Yardi, and we're really excited to continue to evolve. We think Yardi will be a continual deployment for us in a really exciting way, because there's just so much interesting parts of the technology and the functionality that's there that will continue to evolve and use for our clients.
Great. Thanks, Paul. Thanks again.
Thanks very much.